Well, this was supposed to be an historic moment in cannabis legalization, but in the U.S., but it has since been reported that there will be a delay in gaining federal legalization for the product south of the border. Joining us to talk about it is Andrew Carter. He's a director and equity research analyst at Stifel. Andrew, thanks a lot. Tell us about the most recent delay and how far into the future approval is being punted.
Yeah, thanks for having me. In terms of the most recent delay, this was kind of an interesting delay in that this bill didn't have much of a chance in April and doesn't really have much of a chance in August. So this is something we've been expecting for a while. Senator Schumer came out hot and heavy that he wanted to do something early last year. A lot of the industry rallied on that, but we just kind of slowly realized over the last year that it's very hard for that to get accomplished with not even the full support of his own party and a 50-50 Senate.
What happens now in terms of timing and gathering the support that's necessary to get this through amid a very busy agenda of things that seem like they're more pressing to the U.S. public than legalization of marijuana at the federal level?
Well, you said it. It's a very busy agenda. I think what's next now is at best maybe things do retrench. Senator Schumer, some of the progressives accept something like the SAFE Act, something that's incremental versus historic and monumentary. If that happens, that's probably the best shot the industry has of getting something done, something incremental this year that could help cost of capital, ease the burdens on operators. But even that's becoming less and less of a chance. And then we get to the midterms. Who knows what happens there with the change of government? And then we go right back to the drawing board. We may not even address this issue for another Congress.
What does this mean to publicly traded stocks in Canada or in the U.S. that have exposure to the U.S. marketplace?
Sure. Well, I'd say number one for the Canadian names that are working to position there, it's never really meant anything to many of those names. In fact, many of the Canadian producers, they face a very difficult, very fragmented, very competitive market. Some of the larger names out there, Canopy Growth, for instance, has lost market share. They are positioning. They have some stakes, but that's roughly $1 billion of their enterprise value. For some of the other names out there we cover, we continue to like the ancillary names, in particular because they benefit from the inefficiencies in this environment. WM Technology, I would say, is best positioned right now to continue building its leading online marketplace, its leading online brand, and also invest towards its SaaS solution for operators. And this current environment keeps kind of some of the non-endemic players on the sidelines and allows their advantage, their cash flow, to really help keep them fueling their growth.
As you've been speaking, we've been showing viewers one-year stock price graphs of several of the big names, Canopy, Aurora, Tilray. You know what the shape of those graphs looks like, diagonal lines heading from the upper left to the bottom right. What do you see ahead for these shares over the next year?
Well, I would say in terms of for Canopy Growth and Aurora, we continue with our sell rating for the shares of both companies. Canopy Growth, of course, has cash needs. I think the burn last quarter was 150 million Canadian. Something in that respect, it's the company's signal that they're going to have to do some more aggressive cost cutting to meet it. They've been losing market share per headset. Their sales were down 20% sequentially in the latest quarter. So I think more of it that they're going to have to do and address those situations. Similar to Aurora, Aurora's kind of touting the right playbook. They're focusing on the more narrow segments, but it's very difficult for them to gain the critical mass to get to profitability. As far as Tilray, it's a company, we like some of the moves they're doing, but they're definitely overexposed to the Canadian market. And when they have their investor day next week, they're going to have to address how they're going to make improvements. Okay.
Do you have buy ratings on any of the stocks in your coverage universe?
We do. WM Technology is our buy ratings, not exposed to a lot of the ills of macroeconomic pressure. I think it has some counter-cyclical elements. We also have a buy rating on Scotts Miracle-Gro and Hydrofarm, even as I think all the data points point to a more difficult hydroponics category than the industry might think. It's clear to us, we still strongly believe both of those companies will emerge stronger at the other end of all this and be well positioned for a category that grows that can grow low double digits based on the growth of the cannabis industry, perpetuated by both regulatory favorability and demographic.
Andrew, thanks for this conversation. Andrew Carter is a director and equity research analyst at Stifel, and as you can gather, he covers the marijuana sector.